Good afternoon. It's October the 11th, 2017, and time to wrap up today and take a look at tomorrow. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. So here we are in the E-mini. We still like the E-mini. We can sell failure to take out and hold 25.50, 25.51. The current contract high is 25.53. Couple of trades that went nowhere. Getting short at 49 to 51. The low of the day was 46. We were hoping to buy 45s or better. Didn't get there. To get 45s or better, you had to engage the market at 7:45. 8 a.m. Eastern. Just a slow grind higher. The market is long. The players are staying long. You just buy it, let me kind of pull back and disappear for a while, and you'll be a happy camper on most days. Our F1 screen. Inside day. Trade it. My guess is we're going higher. Definitely a P, but perhaps a second distribution higher starting an L period after the FOMC minutes. Strong market. So again, sell failure to take out and hold 53.55. Sell 59 to 61. On the buy side, buying 45s to 47s, 40 to 42. Tomorrow's news: jobless claims, 252. PPI plus 0.4. Core inflation plus 0.2. Nat gas inventories, crude inventories. Focus, PPI, core, PPI inflation, those two. Big number this week is Friday's retail sales. Looking at the note, great 10-year auction, great 3-year auction today. Sets up a good 30-year auction tomorrow. It's always the toughest piece of paper to move. Inside day, so we can try to sell failure to take out that 10 to 16 area. Let them bring it down a little bit in London to set up the 30-year auction, and look for a place to buy it tomorrow for a rally into the auction. Then when the auction hits on the 30-year, you never know. Even if it's a good auction, it can sell. Not for certain. Definitely a P. Volume is to the high side. Selling 11s to 15s. Sell 1. 19 to 23. Sell 2. On the buy side, well, say they're going to take it down a little bit. So 1 to 5 by 1. And 25 to 29 by 2. Looking at the 30-year. '24, '28, number 1. Sell 31s to 03, sell 1. 7 to 11, sell 2. On the buy side, 12 to 16. by 5 to 9 by 29 to 01. Okay, gold. Inside day. Not a lot of action today. Can still trade higher. So $1,300 is probably where resistance really is. F1 says trade it. It is a P. The FOMC minutes took us up. Where we've been the last 3 days, 95, 97, sell 1, 99 to 01, sell 2. Everybody thinks the Fed's now split on interest rates. 88 to 90 buy 1, 85, 87 buy 2. The odds for an interest rate hike in December went from 90 to 73 on the FOMC minutes. Crude had a strong day, higher low, higher high, very strong finish. I'm going to fold those two in. We may have ourselves a move out of the middle here. Saudi Arabia said they're going to cut production in November, lifting 7%. The big cheaters in September: Iraq, Nigeria, Libya. Gosh, what was the other one? Cameroon? I forget. But as Saudi Arabia cuts back, their other OPEC members step in to fill the gap. Oh, crude oil, F1, find a place to buy it. F2. Double distribution up, so 51.25, 51.50. Sell 1. 51.75, 52. Sell 2. On the buy side, 50.75, 51 buy 1, and 50 1/4, 50.50 buy 2. Big day in the euro. The United States may not be raising interest rates in December. Don't hold your breath. Took the euro higher. Higher low, higher high. Find a place to buy it on F1. So 120 isn't that far away. That's where we are. A little higher in London tonight. So sell 15s to 25. Sell 19.50. On the buy side, 80 to 90. We'll pick up this area right down here. Buy 1. 50 to 60. Buy 2. And that does it for this October the 11th, 2017. I'll see you bright and early in the morning. Y'all have a great evening. I'm out of here.